Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. And in fact, I'm so excited to welcome you to yet another promising session on the Forex Morning Mastery with Sheriff Daramola. And first of all, it's great news, fantastic news here. We've been able to hit 1,000 subscribers on this YouTube channel, and I just want to take a moment to express my heartfelt gratitude to each and every one of you who had made this milestone possible. It's your enthusiasm and your engagement that has let us gone this far. Thank you very much for being part of this journey. Let's keep learning, sharing, and growing together as we continue to also make money off the market. And it's on this note I welcome you once again to yet another promising session on the Forex Morning Mastery with Sheriff Daramola. It has been quite an interesting 24 hours, as though the market started relatively quiet, but along the line we begin to see some momentum build up across the board on all the assets we have been monitoring for this week. In fact, the XAU was a little bit dicey, and before this morning when I opened my chart, I was able to see a very significant traction in price movement, and I do hope that we are part of that. So we are going to be deliberating on this one and see how we're going to strategically position ourselves ahead of today's trading session. So as usual, I have conducted a comprehensive price action analysis on all of these assets on our watch list using simple and fundamental parameters such as trend lines, key levels, and of course chart patterns to gain valuable insights into the historical price movement on all of these assets. So the assets on our watch list for this week are three. We have the GBPUSD, the USDJPY, and of course my favorite, the XAUUSD, which is popularly known as the gold spot. And in fact, for those who are joining us for the first time, you might be asking that what is this all about and what do we do here? Well, it's quite simple. We come here on a daily basis in anticipation of both the New York and London session, where we review our existing position and at the same time strategically position ourselves in such a way that we can capitalize on any potential opportunity prior to both the London and the New York session. And of course, our execution time frame is the 1 hour. So basically our analysis here is going to be on the 1 hour time frame. So it's a follow-up detail to my previous analysis actually. So normally during the course of the weekend, I normally share a top-down analysis on this asset and how I intend to prepare myself for the new week. So if you had not watched that video, it is very important that you watch them, as this will give you a background knowledge of what we are going to be discussing here and also prep you ahead of the session. So I have the link to those videos right in the description box of this current video you are watching, so you might want to check them out after the live session so that you can enhance your proficiency in price action analysis. And one thing about it is that they are duly timestamped, so you can easily navigate to whichever chapter of that video is of your interest. So once again, I welcome you on board. Now, before we, with the groundwork laid, before we jump into the business, I would like to confirm that the sound quality is good and the visuals are good as well. Please, I would like to get some feedback in the comment section as regards to this, as this will help me to know if things are going on fine and if they are not, so I can do adequate adjustment to ensure that we have a better experience out there. So I look forward to your feedbacks in the comment section, and thank you in advance as you do so. I see your comment, Adeniyi Babalola. Good morning to you, and thank you very much for checking in on us here, and trust you are doing very well out there. All right, so okay, thank you very much, Adeniyi Babalola. I really appreciate your feedback, and I think we're on a very positive start for today's session. So with that being said, here we're going to be diving right into the business, and as usual, the first thing we are going to be doing is to check on the economic calendar. And of course, we know how these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns, hereby giving us valuable information that will enable us to strategically position ourselves in such a way that we can capitalize on any potential trading opportunity prior, during, and even after the event. So on the economic calendar, you know how we do it. We normally focus on high impact event coming in from economies that affect the assets on our watch list. And for this week, we're going to be looking at economies such as the United Kingdom, the United States, and of course the Japanese economies. So for today, Tuesday, August 22, there are no high impact events to look out for from all of these economies. But I always like to take a little step further to look at the medium impact event, as we do want to have a little insight into what majority in the market will be looking forward to as an economic driver that of course will finally affect price action. And you know, as technical traders, we do want to have this in mind so that we can look out for patterns and structures that will help us to position ourselves ahead of this event. So for the medium impact event, I don't know what is happening here. Let me do this again. All right, okay, I think it's up. So we have some events and speeches coming in from the United States economy. So the first one here is coming in about, let's see, about 5 hours from now, I think. And that is the existing home sales change, which is released by the National Association of Realtors and provide an estimated value of housing market condition. And of course, generally speaking, a high reading is considered as positive for the dollar, while a low reading is considered as negative. So the previous data here came in at minus 3.3%, which of course is not that positive anyway, because we already have a negative on that number. But we don't have a consensus here to gauge what the expectation in the market is. But I think probably an hour or two before that event, this might be updated. So we are going to be looking forward to what the actual data is going to be like. Will it be just as expected, below expectation, or even beyond expectations? Then we also have a speech coming in from Mickey Bowman. Mickey Bowman is an American attorney and a governor on the Federal Reserve Board. So she took office in 2018, and of course she will be giving a speech, and this speech of course will be giving us an insight into the monetary policy of the Federal Reserve. Then we also have Goolsby's speech, which is coming up much more later in the day. That's about 9 to 10 hours from now. Austin D. Goolsby is the 10th President and Chief Executive Officer of the 7th District Federal Reserve Bank of Chicago. So is a serving member, a voting member of the Federal Open Market Committee, and of course whatever he says here will also have a little bit of impact in the market too as well, and of course give us an insight into the monetary policy and whet our appetite ahead of the first German speech, which is coming up much more later in the week. That's on Friday, to be specific. And of course we have other events coming up later in the week. We have the Jackson Hole Symposium, which is coming up on Friday too. Another very important event where we have economists, central bankers, and the likes coming together to discuss, and whatever they say here will be affecting the market. And I'm of the opinion the market is anticipating this event too, of course. And as a result of that, we might be seeing some little choppy situation go on during the midweek. But let's dive right into the chart to see what to look out for. And as technical traders, you know that we want to be deciphering the current market structure, looking out for patterns and structures that we shall be using to guide our trading activities for today. So with that being said, here we shall be diving right into the business. Now, as usual, the first financial asset on our watch list for today is the GBPUSD. Now, the GBPUSD, we have a very interesting setup going on right now. We have a buy position which was triggered yesterday afternoon, I think about an hour or two into the New York session, though we saw price fall into the negative territory, but we begin to see the traction build up again, which is something I've been expecting from the pound sterling, considering the strong GDP data, then the interest rate increase that happened a couple of weeks ago. These are very, very good parameters that's supposed to have incited the bullish momentum, but it took quite a while before this happened. So let's still continue to look at how the market will react to this current structure. And let's run through how the week started for us actually, so that we can have an idea of where we are coming from. And this will also help us to picture where price action is likely going to be heading to. Now, so at the beginning of the week, right here on the 1 hour time frame, the first thing we observed since last week Thursday was this descending trend line, which we quickly spotted and said we will be using that to guide our trading activity for this week. And in fact, that trend line was a sign for us that we might likely be seeing some bearish momentum. Then we also noticed that price action was caught within a range during the first 10 hours of the week, as we saw price confined within the 1.275 and the 1.27250 area, giving us an insight into the level of indecision at that point in time. And you know how we do it in this community. When price action falls into this kind of range, we want to remain patient, waiting for a signal to come up, which of course will come up in the form of either a breakdown of the support line for selling opportunities, of course, and the breakout of the resistance line for buying opportunities. Now, if we look at the structure closely, we saw our sell position triggered. Remember, I think that happened during our live session, or towards the end of the live session yesterday. We saw the sell position triggered, and in fact price moved about how many pips? About 14-15 pips in our favor. And I did told you all that as soon as price tests the 1.271, we do want to be moving our stop loss to break even, as I shared with you on the 4 hours time frame. For those who had watched my video on the GBPUSD, you will realize that we had a setup that was tending towards a bullish bias on the GBPUSD. Can I run through that quickly for those who haven't watched my video? But I implore you to watch that video so that you can have a detailed analysis of what happened there. So this is the 4 hours time frame. And is it the 4 hours time frame I saw this, or on the daily time frame? I think it's on the daily time frame. Yes, so it's on the daily time frame, and this was what we saw on the daily time frame. In that video, we saw a very strong bullish momentum, and to further emphasize the strength of the buyers in this market, we connected the series of higher lows here, giving us a couple of ascending trend line that has been supporting that bullish momentum since the beginning of the year. And one thing that makes this whole structure much more interesting is the situation around here. So in addition to that trend line, we had a key level situated at the 1.267, and you know how we use our key level in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that will support the idea of buying that asset. Now look at what has been going on here along that key level, which interestingly shares a beautiful confluence with that ascending trend line, as you will see here. giving us a clue that there are chances that price action could respect that ascending trend line one more time to push price to the upside. So coupled with this old scenario at this crucial junction, it was quite clear that buyers could come in. But remember that we never negated the potentials of sellers too, as well as we also noted that we could also see price break down that structure to incite a bearish move. So what we were looking out for here are patterns and structure that will support the idea of buying, since price action was trading above the ascending trend line, and of course the key level had the 1.267. So when we scale down into the 1 hour time frame, we begin to see we had a very simple flat channel that we said we will be using to guide our trading activity for this week. Now, one of the signs we saw that gave us the idea that buying is very, very likely was the breakout of that descending trend line. Remember, we had this descending trend line figured out at the beginning of the week, and in fact, price action went through the technical expectations of a breakout of structure, price coming back to retest the structure, then to incite the uptrend scenario. Well, personally, I joined early enough. I joined right around this area, the breakout of that structure, had my stop loss right below the 1.27250, and in fact, it was just with some couple of pips there before price action could have taken me out of that position. But thank goodness that we still stayed in and price moved up, and since that moment we have seen price action continue to find higher highs and higher lows in this particular market. And remember that we also added another key level at the 1.278, a level which has been a major selling niche since the beginning of this month, as you will see here. And during the early hours of today, we finally saw the breakout of that 1.278 to give us more comfort in adding more buy position to that existing trade. So right now we have about 2 positions running in profit. The first position, if you are taking the first position, price will be running with about 37 pips in profit, while the second position is still very minimal with about 7 pips at this point in time, giving us a total of close to 50 pips in profit right now. Now, you know how we do it in this community. As soon as price action moves significantly well in our favor, the next thing we want to be doing is to move our stop losses to secure this current position. Of course, we don't want to be losing out on whatever we have gained so far. So it's appropriate that we move our stop loss. Let's secure some position while we continue to monitor price action for more opportunities to capitalize on the uptrend continuation. So at this point in time, I'm of the opinion that we should be having our stop losses anywhere right below the 1.2770 area. Anywhere below that area seems most appropriate. Let's secure this position, and of course, while we are securing the position, we want to give enough room for price action to break, just in case price will come back to do some retracement phases, retest of structure at some point in time before the uptrend scenario happen. So let's move our stop loss right now, secure this current position, and let's see how price action would react and play out above that level at the 1.27800 area. Now, with a well secured position, what is going to be our plans for today, and how do we intend to capitalize on more opportunities here? Will this bullish momentum continue, or are there chances that we could have sellers coming at some point to push price to the downside? Well, the answer is around here, so we shall be using the 1.27800 level as a yardstick to guide our trading activities for today. And in fact, for those who had missed out on this opportunity, there are still hopes that we could still take advantage of some more opportunities here. So don't get too perplexed that things are not working your way. It's okay, it's fine. It's still the beginning of the week, and there are still I still believe there are still a lot of chances for us to capitalize on as the week goes by. So right now we have the 1.278, which has finally been broken. Remember how this level had been a major selling niche since the beginning of this month, as you will see here. So right now that we have a breakout of that structure, a successful one, price closing above that area, it's a good sign that price action has finally taking out all the sellers around that area. But one thing about this thing is that we are not going to be jumping into conclusions. I personally don't like to have a fixed mindset on the market. The market is a very dynamic environment, and for us to be a successful traders, we want to be as flexible as possible. So at this point in time, price has just broken out of the 1.278, and from a technical standpoint, what are our expectations when price action breaks out of a key level such as the 1.278 we have here? Now, when we have a breakout of structure, technically we expect that some point in time price action will come back to retest the structure in anticipation of an uptrend scenario. Now, for those who had missed out on this opportunity, this is where you want to be looking at. So as soon as we have the breakout of the structure right now, and price has moved significantly well, let's see if the market will come back at some point into the 1.278 to retest that structure. And in fact, when price gets into that zone, we want to scale down into our lower time frame, like the 5, 10, 15 minutes time frame, to look out for signs that sellers are finding it difficult to stay below the 1.278. Now, this would reflect on the chart as multiple rejection of the 1.28. In fact, we could see some reversal patterns around that area, like double bottom structures, head and shoulder patterns, or falling wedge, whatever case it may be. Mark out your necklines, and then we want to be joining that uptrend continuation. So for those who had missed out on this buy opportunity, let's see if the market will come back into the 1.278 to incite some buy pressure so that we can capitalize on the uptrend continuation. So that is one way to capitalize on this, on the uptrend continuation here. Then the other scenario that could happen here is that price may not come back into that area if the momentum is very, very strong. So in that case scenario, we could see a situation where price will continue to find higher highs and higher lows here. Now, in this case scenario, we can see the highest point price action has been for this week right now is at this psychological level, 1.2800 area, a very strong psychological level considering the round figure of that price. So you do want to be marking out that level on your chart right now, as this is going to be another parameter we are going to be using to capitalize on an uptrend continuation. So personally, for me, I'm going to be having a buy stop order above the 1.280, is it 1.2800 level to capitalize on the uptrend scenario. Now, the reason why I'm having a buy stop order above that area, normally I should be expecting a breakout retest of structure to jump in, but the reason why I'm having a buy stop order there is simply because I'm already in profit on the GBPUSD, so I can afford to leverage on the profit I had made so far, using that to test waters above the 1.28 and see if the buy position there is going to click. And of course, if you have been part of this profitable journey in the last 24 hours, you can afford to leverage on the profit we had made so far to test waters around that area. But if you are joining us for the first time and this is going to be your first trade on the GBPUSD, then I will be advising you, since you don't have you're coming in with a clean slate, so I will be advising you to wait for the breakout to happen, after which we scale down into the lower time frame, like the 5, 10 or 15 minutes time frame, to look out for signs that buyers are still very strong here. So that will reflect on the chart as a retest of the 1.28 zone. It could even come to as low as the 1.27850 area, anywhere around that area. But most importantly, we have a breakout, which is what we are looking out for, then a buy pressure around that area to join that uptrend scenario. So if we have that situation, price drops back into the zone, then you can have a buy stop above the 1.28 to capitalize on the uptrend continuation here. So at this point in time, price action, the market sentiment here is still looking very, very bullish. So on the GBPUSD, we hold on to a bullish bias here. Now, in as much as we're looking out for buying opportunities in this market, you know how we do it in this community. We also want to keep tabs with the seller's potential too at the same time. Now, if we are going to consider selling here, personally, I'm not going to be selling. Of course not. I'm not selling in this case scenario. But for counter trend traders, for scalpers or short-term traders who would like to capitalize on some short-term selling opportunities, well, in that case scenario, for me to consider some selling options here, I would want to see price drop below the 1.278. In fact, I doubt if that will happen with the way things are going right now. But if it does drop below the 1.278 and we begin to see selling pressure below the structure on our lower time frame, then we can start considering selling with the hopes that price will come back into. See, remember we have this ascending trend line here. Let me extend this trend line out a little bit so that it can capture the future of price action here. So we could have a tendency of price coming into that ascending trend line at some point in time to incite another wave of bullish momentum. And in fact, you will see that that ascending trend line also shares a beautiful confluence with that descending trend line we identified at the beginning of the week. So with the breakout of that descending trend line, we have a technical expectation if price drops below the 1.278 to see price come into the zone where the appearance of buy pressure here will welcome the uptrend continuation. And of course, that will dovetail to about how many pips that will give. I think about 50 pips thereabout for short-term traders and scalpers in this particular market. But for me personally, if price drops below the 1.278, I'm not going to be selling. What I will be looking out for is price to come back into this beautiful confluence where I will be looking out for patterns and structures that will support the idea of joining an uptrend continuation. But if you are a scalper and you feel comfortable taking counter trend opportunities, well, you can take advantage of the breakdown retest of the 1.278, which could give you a maximum of 50 pips if you don't mind. But like I said, if you are not a counter trend trader, please stay out of that selling opportunity and let's wait for that sell move to culminate before jumping into any uptrend scenario here. So these are my views here on the GBPUSD for today. So we remain bullish. We have a very strong bullish bias here. Let's see how this market will react to this current structure. So I don't know if you have any questions whatsoever as regards to my explanation, or you want me to clarify some certain juncture in this market. Feel free to let me know right in the comment section. So in that regard, I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, and you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next financial asset on our watch list. So the next asset on our watch list for today is my favorite, of course, the XAUUSD, popularly known as the gold spot. And in fact, we have another interesting and phenomenal bullish momentum that has gripped the market here in the last, let's say, 18, 16, 15 hours or so. Now, remember, for those who are with us during the XAUUSD live monitoring window for yesterday's trading session, remember we had some indecision go on at a very critical level in this market, where we saw, though we actually sold initially, we had a buy position, had the breakout of the 1,891 level, and we saw price move about, how many pips was that? It moved about 70 pips before the selling momentum came in. And when this came in, I noticed that we had this ascending trend line which was broken to the downside. So we looked out for selling opportunities at the breakdown of the structure. And in fact, I had a sell stop order below that structure. And the reason why I had a sell stop order there is simply because I was profitable in the previous buy position. So I was just leveraging on the profit I made in that previous buy position on that sell position. Unfortunately, things did not work as expected. We saw price moved about 27 pips. I should have moved my stop loss actually, but I didn't. So price moved back against me, took me out of that position at a stop loss, and came back to trigger our buy position at the 1,891 level. And I mentioned this very well during our live session yesterday, as we intended to capitalize on that bullish move. And since then, price action had continued to climb higher highs. And look at what we have here. Price also broke out this level at the 1,896, and we already have a breakout of the 1,900 level. Of course, this third position is currently running in a loss of about, let's see, how many pips is that? About 11 pips, but in total, we are still very profitable on this one. So, well done to everyone who has been part of this profitable journey. Kudos to you for being on standby to capitalize on this opportunity. Now, with that being said here, you know how we do it. The next thing we want to be doing right now is to move all stop losses to secure this current position. And of course, while we move our stop losses, we want to ensure that we give enough room for price action to breathe. Now, with this case scenario here, I'm of the opinion that anywhere below the 1,896 seems most appropriate to secure this current position. And some of you might be asking, why that huge space of stop loss? Well, the reason why that is simply because, one, we want to give enough room for price action to breathe. Then secondly, I'm still not considering this bullish momentum we took advantage of as a profit, because I could still use this profit I made to leverage on some entries which might take me into a loss. So I'm still not considering this as a profit at this point in time. So let's give our enough room for price action to breathe, move our stop loss wide enough, and let's see how this will play out. The week is still very, very early, and in fact, we still have today, Wednesday, Thursday, and even Friday for strong volatile moves to capitalize on. So don't let us be too risk averse around this area. Let's give enough room and allow price action to breathe. And if price takes us out, it's okay and fine. And if price continues to the upside, it's also all good and fine. So with that being said here, how do we intend to manage our trades for today as we prepare for both the London and the New York session? So first of all, I would like us to run through my commentary on the XAUUSD. And for those who are with me on the TradingView and Telegram platform, you will definitely have gotten this update. And for those who are not part of me on the TradingView and Telegram platform, let's look at this together right now. So this is how we have been monitoring the XAUUSD so far this week. And then, okay, I shared an update about 2 hours ago. I did this one right here. So I said, capitalizing on the ongoing bullish momentum, our two buy positions are now comfortably in the green, accumulating a substantial profit of over 140 pips. It's time to lock in gains by securing these positions, all while remain alert for potential new trading opportunities. And I identified another level at the $1,900 level, where I said we shall be looking out for a breakout to join that move to the upside. And in fact, we already have a breakout of that structure, which is currently running a loss of about 10 pips or so at this point in time. So now zooming into the current structure, our center of focus for today is going to be along the 1,900 level, a very strong psychological area. And for those who have been with me for the last couple of months now, I think close to a year now, you would have noticed how the 1,900 level had been a very strong demand zone at some point in time. And right now the price is back into that area. Is this going to be a retest of that structure to incite selling opportunities, or is this going to be are we going to see a breakout of that structure where that level will become another platform for buying opportunities? Now, I would like us to zoom out a little bit so we can see how significant this current structure is compared to the holistic perspective here. Now, remember, we acknowledge that price action has been very bearish, and finally this week we saw how price action broke out of that descending trend line, giving us signs that the trend line may no longer have the capacity to continue to negate that bullish momentum, hereby emphasizing the strength of the buyers here. So at this point, we already have a breakout of the 1,900 area. So there are two ways to this scenario here. One of them is price could still come back down to retest the structure that was broken. Remember, we had a breakout of that ascending trend line. So there are tendencies that we could have price retrace back into structure in anticipation of an uptrend continuation. So this is one perspective we are not going to ignore at this point in time. So if price drops below the 1,900 area and continuous selling pressure persists below the 1,900, there are chances that price action could drop back into, sorry, let me adjust this trend line a little bit so that it can capture the higher lows we have here. So if selling pressure persists below the 1,900, then there are chances that price could drop into the trend line that was broken. That is this one right here, this descending trend that was broken, to retest it in anticipation of another uptrend continuation. And at the same time, one interesting thing about that confluence here is the fact that it also shares a beautiful confluence with that ascending trend line we spotted during our live session yesterday. So if price comes into that area, it's going to be a very crucial juncture to look out for how participants in the market would react to that price level. And in fact, it lines up exactly with the 1,891, which happens to be the resistant line of the week. Remember, this was our initial resistant line for this week before price action broke out of that structure. So it might come back to retest that structure in anticipation of the uptrend. So that is one way to look at this market at this particular point in time. Then the other scenario, that is for setting expectations there. That is, if price continues to trade below the 1,900, we could see price drop to the downside, and that will be dovetailing to about 90 pips thereabout. So if you are a counter trend trader, you might want to take advantage of that move. Personally, I'm going to stay clear of that move and wait to see how the market will be reacting to the structure to capitalize on the next line of action. However, if price does not do that and price continues to find higher highs, then above the 1,900 looks promising to look out for more opportunities. Now, for those who had missed out on this buy opportunity, that is the breakout of the 1,900, we already have a breakout. Price appears to be coming back to retest structure, which I think is going on right now. So you can afford to have a buy stop order above the 1,900 to capitalize on the uptrend continuation, and then have your stop losses right below structure, somewhere around here, about 30-35 pips stop loss will do to for this buy opportunity above the 1,900, of course, giving enough room for price action to breathe around that area. So at this point in time, things are still looking very bullish. The current market structure is still looking very bullish, so we continue to look out for more buying opportunities. Now remember, I said if selling pressure persists below the 1,900, doesn't mean that the bullish momentum is negated. It's going to be probably price coming back to retest the structure to inside that uptrend scenario there. So let's keep this in mind. Let's mark out these levels on our chart so that we can use them as a reference point to guide our trading activity for today. So I don't know if you have any questions whatsoever. If you do have questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions for me before we move on to the last asset on our watch list for today. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the last financial asset on our watch list. So the last asset on our watch list for today is the USDJPY. Another very interesting situation we have here on this particular asset, as we took advantage of some very interesting buy positions here yesterday, and in fact we had about 3 positions running before this bearish momentum began. So let's run through how the week started for us and what incited the idea of buying this asset. Now, the first thing at the beginning of the week was the key level situated at the 145.00 area. And you know how we use our key level in this community. As long as price remains above our key level, we want to be looking out for patterns and structures that will support the idea of buying that asset. Now, when we saw this scenario, for those who had not watched my video on the USDJPY, you indeed want to watch it so you can understand how we got to identify the 145.00 level as a yardstick to guide our trading activity for this week. The links are in the description box below. Check them out. They are duly timestamped so you can easily navigate to whichever chapter of the video is of your interest. So right back into the business. So we saw this range at the beginning of the week, just right above our key level. And in fact, the breakout of that range was looking more promising for us to join a bullish momentum. Remember? And of course, we also added another ascending trend line here, as you will see, to help us guide that bullish momentum if price continues to remain above the ascending trend line. And you know how we use our flat channel when price action gets caught within a range. We want to remain patient, waiting for either a breakout or breakdown of that range to give us an opportunity to either buy or sell. Now, prior to the live session yesterday, we saw how price broke out of our resistance line at the 145.490 to give us signs that we might likely be seeing a bullish momentum, at least for the first half of the week. And coupled with that was the breakout of this descending trend line we spotted. Remember, we had this descending trend line spotted throughout last week. So a breakout of the trend line definitely will be a good sign that the trend line may no longer have the capacity to continue to negate that bullish attempt. So with the breakout of both the descending trend line and that resistance line at the 145.490, we were ready to capitalize on a bullish opportunity. So I told us here yesterday that we want to be having our buy stop order above the 145.490 to capitalize on that uptrend scenario. So we had the first buy position triggered here. We also had the second buy position triggered at the 950, and then we had another buy position triggered at the 146.300, which of course did not last long before we were taken out in a loss on that one. So in total, we had 3 positions which all dovetailed to about how many pips in profit on that one. I think we had about 60, 65, then we had about 50 on this one, and then we had about 20 on this one before this one went into a loss. So we were able to close about over 100 pips in profit on this one before the bearish momentum began. And for those who have been part of this bullish momentum, well done to you for being on standby to have capitalized on this opportunity. Now that we have all buy positions closed, we have a sell position triggered. I shared an update this morning for us to get ready to join that bearish move if it does break down that ascending trend line. So for the sake of clarity here, I would like us to revisit my commentary on the USDJPY this morning. And for those who are with me on both my TradingView and Telegram platform, you will definitely be familiar with this setup we identified this morning. So this is my commentary on the USDJPY so far this week, and this is how we have been managing this particular asset. So this morning I shared this well-detailed illustration on how we are going to be managing our position on the USDJPY today. So here I said the bullish outlook remains intact as price action holds above the identified ascending trend line on the 1 hour time frame. However, 2 critical factors require attention at this point. So I said here, 1, persistent selling pressure near the 146.300 level, posing a resistance here is a very significant an indicator that sellers might likely be taking over the market. So that was my first factor here. Then the second one here, I said price currently sits at a significant confluence, aligning with both the ascending trend line and the 145.950, just right around this area here, presenting an equilibrium between buyers and sellers. As a strategic move, we'll secure existing buy positions and closely observe market behavior within this pivotal zone, while considering that a breakdown retest of this zone could incite selling opportunities. Now let's go back into the live chat to deliberate on what I was trying to say here. So I made mention of how we are at a very critical confluence as at this morning when I was sharing my updates on the USDJPY, and that is around here where we have a beautiful confluence between both the ascending trend line and the 145.950. And of course, when we have this kind of confluence, we cannot ignore the potentials of sellers too, as a breakdown retest of that structure has a high chance of inciting a bearish momentum. So for those who still had a buy position, I told us all to secure our buy positions while we look out for a breakdown retest of the 145.950 to join a bearish move. Now, if you look at the structure closely and see what happened around the 146.300, you will see strong signals that sellers are negating all attempt by the buyers to break out of that structure. And to further make it more evident is a couple of shooting star candle, which from a technical standpoint is a sign that reveals the presence of sellers at this juncture. Look at what happened here during the New York session yesterday. We already had a signal that sellers might likely come in as we saw a sharp rejection of that zone. Then we saw what happened here during the Asian session. We saw another sharp rejection of that area. And in fact, we are at a very critical zone. If we look at the psychological aspect of this market, considering the expectation that the Bank of Japan is likely going to intervene in this market. Remember last year, it was around this area that the Bank of Japan intervened, pumping funds into the Forex market, selling their US dollar to buy more of the yen to save the yen's value. And because of that happened last year, there is this premonition in the market that we might likely see some intervention anytime soon. And because of this, there has been fear around this area. As you will see, majority are beginning to close their positions, closing in their position, making the profit of the market by seeing this continued selling pressure here. And we might likely be going for a strong bearish momentum anytime soon. So for those who are taking advantage of this opportunity at the breakdown of both the ascending trend line and the 145.950, well done to you for being on standby to capitalize on that move, as you will currently be running with over 20 pips in profit at this point. So you know what you want to be doing right now. The next thing you want to be doing is to move all stop losses to secure this current sell position. So move all stop losses to the entry zone right now. I'm not considering this as profit here, so we just move all stop losses to that entry zone, and let's see how the market will react to this current structure. So now, with a well secured position, how do we intend to manage this position? So at this point in time, I'm going to hold on to a bearish bias here. So let's continue to see how the market will react to this level. So we have another level here at the 145.650, where a breakdown retest will be welcoming more selling opportunities. And of course, for those who are profitable so far this week, you can afford to have your sell-stop order there, leveraging on the profit you had made so far this week to test waters around that area. Then we also have this level here. Remember, this was our resistant line at the beginning of the weeks. Of course, we want to be looking out for more selling opportunities if price action goes on to break down those structures. So in fact, we have potential multiple entries here if price action continues to drop to the downside. So let's be on standby to capitalize on these moves. And one thing about this level is that we might see a situation where price will come into the ascending trend line. For those who are with me, those who have watched my USDJPY video, remember on the higher time frame, we had an ascending trend line spotted. Let me show you quickly. So we have the ascending trend lines here on the 4 hours time frame, which of course has been supported the bullish momentum since the month of July. Now, with the way things are going right now, it appears price action is going through a reversal pattern in the form of a double top structure, where the key level at the 145.00 level could likely be serving as a neckline that will incite a sell-off into any of the trend lines here, probably to incite an uptrend continuation or even break down those levels to incite more sell-off. So it depends on what happens here. So I'm going to be using the 145 as my neckline on the higher time frame for more selling opportunities. So while we go back into the 1 hour time frame, we can now begin to understand how things are going on from an holistic perspective. So let me zoom right in so you can see that is the 145.00 level, which I've just showed you on the higher time frame, could be serving as the neckline of the reversal pattern that we are seeing on the higher time frame. So if price action continues, then we might be in for a long run of selling opportunities. So I hope we will be on standby to capitalize on that one. So at this point in time, I'm not seeing anything bullish here right now. So I'm holding on to a bearish bias. But if along the line signs come in that buyers might likely be taking over this market, definitely I will be letting you know in the comment section of both my TradingView and Telegram platform. So I think I've been able to make justice to this current setup, but if you think that you still need me to clarify some things, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we call it a day here. And you can as well use that time to mark out those levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. You can screenshot my screen if you want to. I think that would be faster, right? All right, so in the absence of no questions, I want to assume that we are all on the same page, and it has been a wonderful start to the week, actually. days, though we had some couple of losses. I think we had one on the XAUUSD. I think we had only one on XAUUSD. So we only had one stop loss. So it has been an incredible start to the week. And let's hope that this momentum will continue. Let's see how market will play out going forward from here. And of course, I will definitely be giving you updates on both my TradingView and Telegram platform. And for the XAUUSD live monitoring window, we shall kickstart 5-10 minutes before the New York session begin. I have the link right in the description box below, so you want to be clicking on the links. Click on the notify me button so that when I come online for the XAUUSD live monitoring, you will get a notification in that regard. And please don't forget to support the project. If you found this content helpful and useful in making your independent trading decision for today's trading session, why not support this project by giving it a thumbs up? Your likes are very valuable to me, and in fact, it also helps the YouTube algorithm push the video to a wider range of traders who may find this content beneficial. Thank you in advance for doing so, and I look forward to seeing you same time tomorrow, and of course in the comment section of both my TradingView, Telegram platform, and of course on the XAUUSD live monitoring window as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.